Hello, everyone. And I'm very
Hi.
happy to be with you guys today. I'm live from AUC, the American University of Cairo. And I'm actually very humbled to be here because as an alumni, I'm here for the first time to speak as a young professional. I'm also joined by three brilliant speakers today, joining us from three different continents. So some of you guys are actually starting your day and are gonna go to bed very soon. I wanted to also speak about the panel. The panel that we're going to discuss is going to touch base on life after raising a round of investment. So we're very lucky to be with founders and two women who are representing VCs and angel investors. Without further ado, I'm here to introduce Iain McIntyre, founder and CEO of HUMM. Hi, Iain, how are you?
G'day everyone, how
You
you
good?
doing? I'm doing well.
Great. You're joining us from where?
My voice joins you from Perth, Western Australia, but my body joins you from Berkeley, California.
Okay, amazing. So good morning to you. And it's
Thanks.
not awkward at all that I'm talking to a screen and just sitting here on the stage. So we're here with Karima El Hakim from Included VC. She's also the president of Wominvest Observatory. I know that you're an experienced VC person, but also an angel investor who is committed to having diversity in that VC world. Hi, Carol. How are you?
Hi, I'm fine, Karima. Good to be here. Thank you. And I'm looking forward to a really robust discussion
Yeah, thank you.
from Amsterdam.
Yeah, from Amsterdam, I was just about to touch base on that. So we're almost on the same hour zone, like time zone. And with Christie Pitts from Backstage Capital, you're the general partner there. And I also assume you're joining us from the States as well?
Yes, that's right. I'm from California. I'm in
Amazing.
California.
Good morning
Yes.
to you as well. So yeah, just before we touch base on each of your experiences, just running through the agenda of the discussion, we really wanted to be as casual as possible, so we can also relate directly to the startups who are watching us without intimidation. We're really here to give them the reality check they need to know that life after investment isn't necessarily all pink and all roses. It's a lot of hard work. It's dealing with new people on your cap table that will start having a seat on your board. So this is going to be the tricky part. I would love to hear from our founder here, Iain. Who could tell us after raising, perhaps you can tell us how did you, when you raised, what were the big question marks that you had, or what was the misconceptions that you might have had as a successful entrepreneur going into that round of investment?
Yeah, so I'll give a little bit of context first, just to kind of help explain how my journey impacts my understanding of this issue. So my company was founded, my company's HUMM, this one just behind me. We were founded in Perth in Western Australia, which is the opposite side of the earth, literally, to where I'm sitting right now. We moved over to California in 2018. We've been a company since 2016, doing some kind of like fundamental research and development of a pretty exciting product, which is called the HUMM patch. And that patch is something that you put on your forehead, just like this, and it actually puts electricity into your brain. It's not a new thing. It's been around for about 30 years, this technology, but it is a very new version of this technology. And our patch actually helps people with working memory. What it does is it tunes the field of the brain and actually boosts the signals responsible for something called working memory, which is like the RAM of your brain. So we're a hardware company. We're a science company. We've been around for a couple of years, but we moved over here to Berkeley to participate in an accelerator called the Berkeley Skydeck Accelerator, which is a fantastic accelerator to do. So we've raised about 3.1 million so far. So from some people's perspective, a lot of money. From some people's perspective, absolutely nothing, right? And there's a lot more money to raise in doing something so slow and hard and difficult and expensive as neuroscience combined with hardware and consumer business. That 3.1 million split into a 2.6 seed round that we did at the end of 2019, just before COVID hit, which was very lucky. And That was led by Blue Yard Capital, German VC, and CRCM, a VC based here in San Francisco. And previous to that, had raised a whole bunch of angel money from advisors and very small investors, including my mum at the very beginning, who put in $5,000. So, it's been a real family affair, and some of my own money too. So I guess this question I should best kind of focus in on what it was like after that seed round that I did at the end of last year in 2019 for HUMM. So before that round, I think it's true of every phase of investment that you go through, that you come out the other end a little bit different, just in terms of what expectations of diligence and depth you have in things like your financials and your understanding of what your staff are up to as you grow. We went from a 3-person company to a 10-person company after our seed round, so it's a different management exercise. We went from talking to angels and stuff like that to very much only talking to VCs these days that do Series A's, which is our next round of investment that we'll be raising. The biggest misconceptions, I would say that, interestingly, I thought life would be really, really different, but I don't know if it's a particular factor, a particular like a consequence of my kind of company, but our business is very expensive to get off the ground. It requires a bit of upfront investment, and so I thought that maybe with money everything would become a lot easier, but actually money doesn't make anything easier. I think you spend a lot of time wishing that you had more money, of course, but the problems continue. The roller coaster continues, and it still remains a very small, agile business. That being said, you do have to become more diligent with things like your financial reporting, with your stakeholder management, the way you run your board. Some of those things were pretty well expected, when you read online about what happens after you take on VCs. Some good blogs out there from Skydeck and even YC here in California. But yeah, I think the thing that was most surprising was just that life didn't really get much different. You have one less problem of running out of money, but you're still really focused on growing your business and figuring out how to do that. And that's just as difficult with money. So, yeah.
Absolutely, and I also second that because with more money comes more responsibility, comes more of a growth, and your strategy becomes more about expansion and growth and scaling up. So it definitely comes with more work. I'm sorry, but I forgot to introduce myself, and just because it's very strange to be alone on a stage. I'm Karima. In case you don't know, because here my name is written Basili Hall, and I'm not Basili, and I'm definitely not Hall. I actually represent perhaps more the founder side as well, because I work in a tech accelerator with 70 plus investments, so 70 plus portfolio companies. It's called Falak Startups. We're based here in Cairo, and we focus on early stage tech entrepreneurs. We're sector agnostic as well. So from there, I really managed to see and touch base and really go with the entrepreneurs during their journey, either before and during the raising round, and now after having a successful partial exit from one of our portfolio companies, I can assure you that after the raising comes a lot of work. And from an investor side, which also we're it's an older, a smaller ticket size versus you guys from VCs, then we can also say how the risk factor is added. So definitely, Iain, I second everything you said. The misconceptions of having life handed over with more capital is not always the softest, smoothest transition. I would like to know as well, since we come here really and representing startups without borders, because you guys are from 3 different places, and some of your investors, or perhaps speaking to the investors, you invested in other continents, in other countries, not necessarily aligned with the same cultural background, with the same language barriers sometimes. So perhaps us. Carol, you'd be here to give us more an idea of what you do and how you tackle this borderless investment cycle, and how do you deal with your portfolio companies who are pretty much outside your comfort zone sometimes, and how after the investment you're here to talk to new teams and be part of their growth journey.
Well, to start off with, I live in Amsterdam, but I'm originally American, so I'm from Chicago. And for those who know the accents, you can hear it very strongly, I'm sure. But I've been in Amsterdam for a couple of decades now, where I've been very busy, initially as a founder of my own spice business, and then as a business lecturer at Nyenrode Business University. And I'm also, as I said, a VC fellow with Included VC, and I've become an angel investor on my own, often working with syndicates, in syndicates with others. And I've recently been looking to branch out, and I've been actively searching for good deals coming out of the African ecosystem and Eastern Europe, because money goes a lot further there. And I'm always looking for impact, where I can give the, with my small ticket, can have the biggest effect on somebody that gives them that initial first boost. But as I joke, I'm here to complicate your cap table. But I want to help you. I want to help people who maybe don't have those, the family and the friends that can write those first checks for them. So that's what kind of the role of the angel is. And so we're small, we work together, so you can actually put together quite a bit of cash off of us. But it's more people, more opinions. Generally, we don't serve on your board because we're too small, right? With those spaces for the VCs. And even for the VCs, those spaces will change as you go through different rounds, right? So you don't keep your same board with you for the whole time. So I'm that kind of initial person who gets your updates. And as a lecturer in business, I got this out of, mentoring businesses, because I worked in entrepreneurship programs, and for helping businesses shape up and save themselves. And that comes from doing their homework and starting early with discipline. So you have to, pay a lot of attention to your daily cash flow. And that can't be stated enough, because what I've seen patterns over and over again are that businesses get this check, right? They get this money gleaming, and they start thinking about, office furniture. And that's not what it's there for, right? You want to use it strategically. So you have to really be disciplined and sit there and think about that runway, and think about how are you going to do all this, use this money smartly, and not think later how you're going to use what's left of it. So be very smart from the beginning. It's all about burn. You want a controlled burn. You want to be lean. You want to be simple, and and then focus on what you're supposed to be doing as a core part of your business. And for me, like I said, I'm interested in the impact that I can have, the greatest impact I can have as an angel investor. And I would really rather give it to someone, keeping my eye on intersectionality, because it's very important to me, for how far, these people usually have to go to try to get cash. And it's more difficult the further you are away from that nexus of power. Like, say you're of a different ethnic group, or you're an immigrant to the Netherlands. I mean, I might be from the States, and I am from Harvard, but I am other here. I am very, very, very different here in the Netherlands, and it's hard for me to access the same way that someone who maybe is ethnic Dutch, born here. So for me, it's very important to give to those people who need it and will work every cent of it, instead of to somebody bloated and undisciplined who will use it for office furniture, representational properties, and vehicles to get back and forth to those things.
And just to jump on what you said about you being the other in a country, have you had any specific experiences where once you had finished the due diligence and it's fine, the contract has been signed, the shareholders agreement has been signed, and you are part of a new company, did you clash at some point, without having it being a bad clash, but have you had this experience of, oh wow, this was not what I expected, now that you're part of the team or the family of the company?
I've never had that problem before, because I really know my entrepreneurs before I invest in them. And that's part of being, you know, on that small scale. You know, it's very intimate, and they're coming to you and you're really talking, because it's the very beginnings. You know, maybe they're just coming out of the ideation stage and figuring it out, and they're just getting started. So it's more intimate. And so you get to know someone better before, you know, you make that initial investment. So you don't get lost in the noise or anything. So I haven't had that, but I have to tell you that I'm really against lazy thinking, and I think that robust discussions are the best way to strategize and come up with new ideas. Because if everybody's just in groupthink and they don't question each other, you're not going to get anywhere, right? So I think that you really almost have to have someone play that adversarial role, right, in a meeting and in a discussion, to just make sure that everybody's sharp and always using their best brain, you know, to solve problems. So I actually like a little bit of conflict.
Absolutely, thank you. I would jump directly to Christie's maybe just argument about this, because you probably represent a VC that puts up more of a higher transaction, bigger transaction size, ticket size. That's what I assume. Please correct me if I'm wrong. And for you, you're taking that risk of going into, for example, pre-Series A or Series A or even higher investment rounds. So can you, as you introduce yourself and what you do, what you're passionate about, can you also tell us about the risks that you always need to take into consideration once that investment is locked, once the commitment has been put? Have you faced anything, or the due diligence time and the fact that it takes a lot of work and a lot of talks and a lot of interactions with the founders, you'd never really get disappointed?
Yes. So thank you so much for having me here. I'm Christie Pitts. I'm a partner at Backstage Capital. Backstage is an early stage venture capital firm. We're based in the United States, but we do make investments internationally. And our focus is on supporting underrepresented founders, meaning founders who traditionally do not have access to capital in the venture capital ecosystem. So for that purpose, we invest in companies led by women, people of color, and LGBTQ founders. And to date, we've invested in just over 150 companies led by founders of these makeups. And we have invested across every sector. So we have healthcare companies in our portfolio, artificial intelligence, as well as consumer products and direct-to-consumer e-commerce companies in the portfolio, media, and so forth. And we actually do have a relatively small check size in comparison to the VC industry at large. I don't know why the light is looking so funny, but I'll do that. Okay, so our check size is typically ranges from $25,000 US to $100,000 US, and can go as high as $500,000 for later stage companies. So to your question about diligence and about what it's like once you're in a company, like after you have made the investment and things aren't going to plan, that is the case 100% of the time. Things never go to plan. And if it is going to plan, then the plan was not ambitious enough, or you're not really awake because it doesn't go to plan. It's just not a thing. So what we see is we have to balance our role very carefully between providing our opinion, providing expert advice to the founders, and also allowing our companies to make the decisions they need to make in order to grow their companies effectively. And what we do for that is we spend a lot of time with our portfolio companies. So that could be informal investor meetings, but it could also be an informal one-on-one conversations where we discuss with them whatever's going on with the business. It could be a question they have about, a product differentiation, trialing the product, reaching out to business development, to consumer strategy, go-to-market strategy, or it could be a question about gaining further investment. And that's a big role that we play. We believe that, like Carol mentioned, we believe that there are many founders out there who are deserving of capital, who are working on venture backable businesses that may not have the access or the network in order to reach those businesses. And so what we do is we come in and we help legitimize those founders by providing their first venture capital check. And then we help them access further rounds of funding, Series A, Series B, and beyond. And so a big part of our role is ensuring that the companies are ready for they're meeting those milestones in order to be ready for that next round of financing.
Excellent. Thank you so much for this. Well, now that we did the round of introduction, kind of everyone gave more of a background to what they do, what's their mandate, and Iain explained his very deep tech startup. I would love to have this as a conversation where we're not really targeting one person with one question, but this is a general question, and whoever wants to jump on, please just go ahead. They say raising an investment, especially when it's a substantial size, it's like a marriage. And once you get married with these, or like it's a union, let's not go too orthodox about it. So it's a union. And what are the qualities of your partner, whether you're coming from a founder's mentality, so perhaps Iain can give us all the traits that he'd be looking for and really seeing it come in handy once this union has been made. And for you guys, as for you ladies, as women in the VC realm, what are the typical partners that you'd like to see? So I know that dedication and ambition is something, someone who's also agile. These are the founder traits that most investors are looking for. So would you also can you also help describe the avatar of that perfect partner or the union that will make life after investment pretty rosy and fruitful?
Well, I'll start by saying that I'm looking for someone who's intellectually curious. You know, that is always learning, is always looking to learn more, and is always, you know, because that's where pivoting comes from. You have to think about it. If you don't know it and you can't see it, you can't be it, right? So they have to always be looking every day, reading the papers. This is what I want. I want to see stimulation. I want to see an alive and alert brain.
So someone curious who likes long walks on the beach, perhaps?
No time for that.
Yeah. What about you, Christie?
I think you make an important point about the relationship between a founder and investor being sort of a union. And I don't love the analogy of the marriage because it's very different. But I do think that there's some parallels because you cannot break up a marriage without involving a lawyer, and you cannot back out of an investment without involving a lawyer. So there's a parallel there. And so I think the biggest piece here is about trust. So for us, we need to trust that the founders know what they're doing. We can provide them with guidance. And in some cases, when we have board seats, we can provide structured governance. But for the most part, with our companies, we do not have board seats. So we're there to provide feedback to them and trust that they're going to do the right thing when it comes to building their company. And that could mean hiring the right person, or it could be firing the right person and doing that on the right timeline. And so it's important that we have a strong relationship with them. We can trust them to make decisions, and we can feel comfortable that they are in the driver's seat and we are not.
Yeah, absolutely. And from a founder, Iain, you could tell us, have you ended up in a union, and after this union, have you discovered that perhaps your the new investor here has been overpowering, trying to be much more hands-on, while they're not the terms of the investment wasn't like that? Or what is the perfect trait, or not the perfect trait, but your most favorite trait in your investors?
Yeah, I'll share a couple of thoughts. I think there's some good stuff I can say here after having a couple of years of experience. So first of all, it sounds like Carol and Christie would be great investors. You know, wanting to work with them, wanting to work with the founders, and be curious and like energetic, and at the same time, it sounds like very supportive and realistic about how plans change and stuff like that. Yeah, so a couple of thoughts. So I think the marriage analogy, what it's trying to convey, that's really important to understand, is that your life becomes tied, or your company becomes very importantly tied to the people that have invested in your company, particularly your lead investor if you do a big institutional round. There's obviously different kinds of investors, VCs and angels sometimes act and behave very differently, not necessarily. But if you've got a VC fund investing in your company, you're typically having a couple of people that you're going to have to interact with from that company, and maybe one core person who was the lead investor who probably ends up on your board. But usually you also have, a team of associates and things like that. I think a really important thing that wasn't common advice that I got, but was really important, was before you kind of jump into that relationship, ask to talk to people that have worked with that VC or that angel before. Get to know what good and bad experiences were like with that person. And one of the great things that my current VC, Blue Yard Capital, which is a Berlin fund that invests in all kinds of awesome stuff, did for me was they actually introduced me to a couple of founders whose businesses had failed that they had invested in, because that was just as important as talking to the people that had been successful with them before. So that's a good tip. But I think to answer your question directly, what is the thing that I think is most important? Look, being a founder is hard. I'm sure that lots of things you could be doing in life are very hard, but being a founder and being a CEO of a startup is a kind of a unique thing that you need unique support for. I think that the critical criteria that I have for any investor that I'm working with is basically that they're supportive and encouraging and positive. And it's not all about picking apart the little details. What we're trying to do here is grow a business to $1 billion from a moonshot idea. And so that can be difficult, there's a lot of roller coaster dips along the way, just as there are highs. And working with someone prepared to actually sit down with you, talk as a human, support you, and encourage a good attitude between you and a good relationship between you, I think that is just as important, if not more important, than things like organization and communication and open-mindedness and all of the other things that I think are important in a good partner.
Definitely. And just to add on to this, coming from an accelerator background and being very, very close to the entrepreneurs during this acceleration period, since they actually work from our office, and we go through at least 6 months of really hands-on KPI-driven programs with a lot of venture growth in the middle. We did not have any difficulties dealing with the entrepreneurs. Perhaps the most important criteria would be the team being mature enough, coachable, etc. And when it comes to the capital that we invested, we always look at giving them smart capital and not just being friendly and warm and understanding and supportive, but we try to also, as much as possible, give them access to our network and strategic investors as well when we come to raise a second round or help them do a follow-on funding round. We always look at that strategic investor. Sometimes they're corporates, they're big corporates who want to acquire part of this technology because they don't have the time or resources to create it from scratch, and they really want to find local expertise and entrepreneurs to partner up with. So from a strategic investment standpoint, how do VCs really choose, even if you're sector agnostic, but do you also choose the companies that you're able to open a market for, that that your network or your other portfolio companies can also be part of this union? How do you take that on, maybe for you, Carol?
Yeah, that's really interesting to me because, when we talk about capital and the capital we bring with us, it's more than just financial capital. It's also network capital and social capital. So what I have to think always about, what else can I add? Where's my value in this? And is there anything else I can give? Because I give, I write a small check, but I have, big resources when it comes to knowing people and being able to work hard for you to get you your next funding round or to get you into, whatever retail establishments or whatever it is you're trying to do. And if I can't do anything for you, then, my hands are tied also from early on. So I'm most interested in those businesses where I can add as much value as possible in terms of other kinds of capital.
Do you also agree, Christie, about this? About really having that, the choice of the venture you're going into has to make sense with your portfolio, or you're really focused to just serve your mandate of giving that capital to underrepresented demographics?
I think that this depends from company to company. And I would actually like to spin this and ask Iain. I want to take a little stab at it, but I'd like to hear your thoughts on it. When I look at the companies that we've invested in, I think the reason that they take our check is because of, obviously they want the money, but beyond the investment, the financial investment, I do think it's the support that we provide. And we are very clear about our lanes, meaning that we help provide a network of companies that are going to support them, like what you've mentioned, in nearly every sector. But we also are going to help them access follow-on funding. And I think what's important is that we're very rarely investing by ourselves. So almost in every situation, we make an investment and the founder also takes an investment from other investors. And so that's why I'd like your opinion, Iain, because I think it's important for the founder to be balancing different voices from their investor base, and they're not looking to all of their investors for the same thing.
Yeah,
I think I might have missed some of the question. What would you like me to talk to specifically?
Yes, when it comes to investing, the importance, I guess, essentially like the support beyond the check. So is it important that your investors are making network connections for you? And how do you evaluate when it comes to how do you evaluate the strength of one investor's network versus another?
That's a really, really interesting question, the second part of that. So yeah, for the first part, to come back to the marriage analogy, you can't marry 20 people at once, right? Like you only have so much time. And as a startup founder, you've got a lot of time you need to spend just growing your business. But that being said, the people that you've got invested in your company should be, I think, just as important as your advisors, just as important as your staff in some ways, in terms of the fact that you've got an open mind to listening to them, and getting help from them is really important, because you only have so many people you can actually physically interact with. And an investor has taken the time to get to know your business. They've taken the time, probably taking the time to spend with you for years afterwards to help you. So it's super important that you're able to get what you need out of that relationship. I think that, it is a little bit different as you go from stage to stage, and different investors do or don't follow along. Like, I don't still call my mum for startup advice, but I call my VC fund that led the round all the time. We have regular calls, and one of them's on the board and stuff like that. How do you evaluate the value of their network? I think talking to some of the founders that they invested in is really helpful, because you'll find out, do they make introductions? Do they actively, proactively try to understand how can they provide value? Do they listen properly, or do they try and push you in a direction that they think the business should go on that you don't agree with? These are things that I think are super essential to understand what you're getting yourself into. And I think that they can be transformative. I think one of the things that I don't think a lot of people realize about startup funding is you've got to be really careful who you take money from, because the people who you want to invest in you later, or your main customers, these kinds of things, they're going to want to talk to your investor at some point. And if that investor doesn't follow on to your next round, that's a signal. Doesn't necessarily mean it's a bad signal, but it's something that people ask about. Why are they not following on? And that investor is going to have spent time with you. So if someone's doing due diligence on your business, they're 100% going to want to talk to that investor and get a perspective on your business. So it's really important to bear that in mind. How do you measure the value of the network? I think it's really particular to different companies. My company, so we have some investors that invest in a whole bunch of things, fusion power to quantum computing to blockchain stuff, and HUMM, obviously being in the neuroscience and consumer space, very different to those things. And so evaluating their network, The question was more, can I get access to people that I can learn from? Can I get, is this investor able to kind of represent me in different circumstances to help me find staff and things like that? Do they have access to a large network? But I think that's probably something that as an entrepreneur, I'm still learning. How do you judge the value of a VC and the network? It's an interesting one.
Great. Thank you so much for sharing this. And I'll just, we don't have too much time. And I think this conversation has just started to become more and more interesting for the audience. And I wanted to take it another direction to this. So we understand very clearly the expectations, the hard work that comes after, and the best practices or the best type of investor / best type of criteria in a startup founder. Now, one component that people sometimes they think about it only after the union happens or after the investment has been deployed is the announcement. So from as a commercial person, and I'd love to hear from you guys because you can help me do my job better. For how do you announce? What is the best way to announce such a venture, and especially if there are sensitive numbers involved? For example, one of our startups had been partially acquired by a publicly traded company that had to announce for its stock market disclosure. So do you guys have any advice regarding the announcement, the commercial side, the PR? How do you go about? Do you wait a certain time until, for example, the first milestone has been done and the money has been deployed, or do you not want to lose momentum and you go straight to the announcement and the big fuss and the big PR? Does anyone here have any experience with good or bad practices to share?
Yes, I'm happy to jump in on this one.
Please.
So I think it is important. The PR is a tool in your toolbox, just like any other. And so I think sometimes founders are eager and excited to announce the funding of their company, and that is all that they're announcing is the funding, when in reality that funding announcement can actually be strategic for bigger purposes. For example, it could drive customer acquisition, it could help position the company for business development conversations and so forth. And so I just want to highlight a couple of our recent investments and what they did well. One investment is called SUMA, SUMA. And the founder of SUMA is a woman named Beatriz Acevedo. And SUMA is a financial literacy company for Latina, Gen Z and millennial people. And so in the United States, Latina Equal Pay Day was October 30th. And what that represented was how far into the year a Latina woman had to work in order to earn the same amount of money that a white man would earn on January 1st. And so because Beatrice is very influential in and of herself, she was able to leverage Latina Equal Pay Day in order to announce her investment, and it drove a lot of interest in SUMA. And another one that I want to reference is a company that we recently invested in called Undock. Undock is a calendar company. If you're familiar with companies like Calendly, Undock is like on a whole other level. Their phrase is "Save the calendar, save the world." And so with their announcement, they actually did a launch event, and it was very fun, almost like an Apple event in the past where you would go into the theater and Steve Jobs would present. They had a well-produced video that was like, I'll say like extraterrestrial. They really put effort behind making it very entertaining and taking a subject that's kind of bland, like your calendar and how you plan your workday, and making it fun and interesting, and then also engaging the investors that participated in their round. And the reason why I bring these up is because those fundraising announcements, while they were fundraising announcements, they were part of a greater strategy that for both of these companies led to better results. And so that's my opinion, is that when you choose to be in the news, have a reason why. Sometimes you don't have a choice of why you're in the news. And so you're forced to decide how to respond. But most of the time you do have the ability to be strategic and to leverage these opportunities for more than what they may seem at face value.
Anyone else wants to give it a shot of like what is the best way to announce an investment, especially that this is how we wanted to end the panel discussion and taking a different direction from not just the investment side, but also the commercial purposes of raising a round?
I'll mostly echo what Christie said there, but like one of my favorite investments is this, which is Ozarka, since we're calling them out, which is a zero waste solution for delivery services. They hashtag like crazy. They're brilliant. They're absolutely brilliant. And every time there's something about climate change, they are all over it. So they're with the original message and then talking about the solution that they provide for that. So they set it up and they don't create a lot of unnecessary like noise, but it's very strategic and very focused and very centered and like on the message of the day for that one. So they've been a thrill to work with because I can just write it out basically.
I would only add one thing, which is just like you don't need to publicize investment, and you need to be careful how it conveys what it conveys. You know, like any PR is good PR in some respect if it gets people to look at your business, but if it's negative, you got to be careful. I've seen startups that have like kind of controversial issues related to them. Like I remember there was one that was doing AI vetting of babysitters, going through their social media and stuff like that, and them raising a round of investment is obviously a much more complicated exercise in terms of like probably they need a PR firm to make sure that they're ready to answer the questions and the fuss that comes up about. Another thing that was interesting this year, I noticed that with the election going on here in the United States and COVID and the fires and other things going on, I noticed that some founders were kind of holding the information of their fundraise until there was not as much distraction in the media. So that's another interesting thing. And my final point is just that I think there definitely is this culture of being obsessed with investment, but really what we're meant to be doing here is eventually building profitable businesses. And there's the kind of sycophantic love of raising capital and comparing your business against other businesses based on how much capital that has been raised. And a lot of people don't have that attitude, and that's good. But I think just be careful when you're talking about fundraising, whether or not you think that it makes your company successful, because raising capital is hard and it should be celebrated and it's an important part of growing a business, but it's also just one part. It's not the be all and non delta of raise capital, and you don't want to convey that to your customers and things like that necessarily.
Yeah, exactly. And just to really end this conversation, and I thank you all for your very insightful intakes on this. Yes, we do love as an accelerator, for example, for early stage startups based in a country like Egypt during COVID-19 pandemic, announcing such a thing would just make the ecosystem boost its morale. You know, it will boost the morale of Egyptian entrepreneurs. It will really have that positive impact, even if it's just a small amount of investment or one or two every now and then. It still is a sign that the ecosystem is healthy and that the capital is still running and flowing during very difficult times. And again, thank you all for being there, whether you're a live audience or at home, staying safe, hopefully. Thank you, Iain. Thank you, Carol. Thank you, Carol. Thank you, Christie, for being with us today. And I'm really humbled and honored to have been able to moderate this panel. And yeah, you can add us all on LinkedIn, just as I did before the session, to all the panelists. And hopefully we'll see you next year, next summit. Thank you.
Thank you, Karima.
Thank you.
Awesome to be on such a cool panel.
Same. Bye. Thank you.
Thank you guys for that amazing talk.
Yeah, no worries. Thank you for having me.
So we